Ladies and gentlemen, we are entering a very interesting time. Just look at the chart. This is the FTSE ST-REIT index. You can see it is on the verge of a breakout. Is it going to break up on the outside, which was formed from the orange upper level since the beginning of this year at the timing of about maybe 765? Or is it going to break down on the low side, as you can see from the chart? The orange line depicted since the low reached in October last year to the current level. So that is going to be the level about 735. So in this week's video, we're going to share with you how we can actually profit if indeed this breakout happen, and most importantly, when will the breakout happen, and most importantly, where it will actually break out. Ladies and gentlemen, the rhetorical media approaches SGX pronouncements that REITs are real estate investment trusts that's good for your long-term money investment. How true is this? Ladies and gentlemen, with the REITs being so volatile, and especially so in the last 1.5 years, is this still the notion? Or should you be approaching a trading mentality towards real estate investment trusts? Well, this is something that we have shared in our GCP Global classes, the last of which was in February. Let me share with you some of the things that we have distilled with the various participants and how they have profited from there. Take a look at the first chart, ladies and gentlemen. Just last week, the Capital Group of REITs released their results. You have actually Capital DC reporting, that's data center REIT. You have Capital REIT reporting, that is the office REIT, and then you have Capital Oak Pacific REIT, which is the US office of the Capital Group REITs reporting. Now you can look essentially again at this chart here. There are diverse performances between Capital DC, the data center REIT, versus Capital REIT, the office REIT. Why is this so? And why is it that we were able to warn on this in our GCP Global classes to all our GCP Global investors, and which we have also shared in our early videos. Now look no further, ladies and gentlemen. Look at the first operational update of Capital REIT. You see that essentially this is a REIT that actually showed the improvement in property income of 5.9%. But it will trickle down to the bottom line. You can see that the results were severely affected by a big jump in borrowing costs from 12 million to 15 million. And that's why, not surprisingly, the distribution income from operations were down by a commensurate 3 million, 53 million down to 15 million, right? And if not for the distribution income from the anniversary, which will be spread over 5 years, so every quarterly you're going to get 5 million for Capital REIT investors. So it is something therefore that have uplifted the total overall DPU. But smart investors look at operational DPU and operational DPU improvement, and that's what we focus our attention in our classes. And not surprisingly, you can see from the chart that Capital REIT, the office REIT, actually fell 1% or 2 cents. No big deal, you may say, ladies and gentlemen, but if you are a trader, if you actually are able to predict this and prevent this 2 cents drop in Capital REIT and actually switch in Capital DC, in which you gain 1 cent. You for 100,000 1 week work capital outlay, you actually make $3,000. Now compound that over a month, compound that over a year. What kind of return you gonna get? Yes, it can be tremendous. And real estate investment trust gives you this kind of trading opportunities. Now, once again, look at the other contrasting result of Capital DC. So Capital DC is the data center REIT itself. You can see that the operating results were strong, as what we have actually guided you in our previous YouTube videos, as well as basically in our REIT investment classes. Now, at the top line, which is the revenue, it grew 6%. At the net property income level, they grew also 6%. At the DPU level, they were up a fantastic 3%. Okay, and as essentially what we have mentioned earlier, AEIs for REITs can be actually tremendous. In this case, they have AEIs done on their various European assets as well as Ireland assets last year, which is actually flowing into the earnings this year, as well as new contributions from Guangdong Data Center 2 and Guangdong Data Center 3. So essentially, ladies and gentlemen, you can see that for Capital DC, it was a no-brainer, right? And that's why you can see in our previous videos as well as in our investment classes 6 months ago, we already told you that when Capital DC dropped 180 from $3 down, it was then a value buy. And of course, for students who attended our investment classes, we have drummed that message in true and true. So once again, if you look at the relative outperformance and underperformance, in this case, the outperformance of Capital DC REIT in comparison to Capital REIT, you can actually see you get a 3 cents, well, not that much, but if you're talking about 100,000 investments, $3,000 in a week work, 5 days to be exact, for 100,000 portfolio. Compare it over a month, compare it over a year. There you have it. You can actually make millions trading real estate investment trust if you know how, right? So you may say, ladies and gentlemen, as interest rates go up this year, as well as in my Business Times interview just recently, I've mentioned that REITs are embarking on more AEIs, and this is actually good for real estate investment trusts because the bottom line is that the DPU will benefit from that, not grandiose acquisitions which are actually questionable when it comes to DPU impact. So in our classes, ladies and gentlemen, upcoming class on 27th of May, we're going to question a few things. One is that, now this actually shows our recent dinner with the new CEO of United Hampshire REIT, a REIT that has been smashed down so badly. Is it a REIT that's been torn down badly in collateral damage, because of the huge underperformance of Manulife REIT, Capital Old REIT, and Prime REIT? Or is it an exceptional case of great value that's emerging? We had a good session with the senior management of Manulife, United Hampshire, I beg your pardon, as well as its new CEO, for which we for GCB Global Investor students just 2 weeks ago. We hope to share with you in detail in the 27th May class. So do sign up and enjoy our special. Of course, other things that are on agenda as we report earnings this week is basically, some of the bigger REITs that we report will come from the Frasers group, the Capitaland group. So take for example, one of the REIT, let's say you're not such a short-term trader like us, then if you look at our last class, we have mentioned, for example, Frasers Centerpoint Trust, which we say that after a good rebound, from the lows in October right up to early part of February, it pulled back. As you can see from the chart, it's down 6%. And we did tell you that at 2.13, it was an opportune time, as what we have said, not only in our classes, but we have also shown it in our various YouTube video. Now this, ladies and gentlemen, was in March. And where are we now? April. And Frasers Centerpoint Trust is going to report results when? This week. Okay, what kind of dividend are you going to pay? 6 cents. So, as of last Friday, the share price is 231. So we're already up from 213, 18 cents. So they pay us dividend of 6 cents without doing anything further, without even needing the share price to move up even further. We are up 24 cents. So essentially, this means that for 100,000 investment on Frasers Centerpoint Trust, just a month ago, following us in our classes, in our YouTube video, you would have made 24,000. Well, ladies and gentlemen, such is the ebbs and flow of real estate investment trust. Hope you enjoyed this week's video. Give us a thumb up, subscribe, and follow us as we trace for you the results for the real estate investment trust. So back to our earlier question, and to what extent will the real estate investments break up on the upside or downside? It depends. It depends on the corporate results coming up, how strong, how weak. And this is something that will guide you closely. So we don't play God trying to tell you and forecast whether to break up or down, but we analyze for you each and every one of the REIT that actually goes into impacting whether the REITs will break up on the upside or the low side. Once again, give it an upside for this week's video. Cheers and see you again next week. Adios.